Hello, everyone. Welcome back to our gold market analysis series. I'm thrilled to have you here as we dive into our latest insight. Last week, we witnessed an impressive 600 pips move that pushed gold up to the 2,925 level before buyers hit a solid resistance wall, and this was actually our trading setup prior to the beginning of last week. And as you can see here, every attempt by buyers to break out of the 2,925 level was met with strong resistance from the sellers, revealing some level of uncertainty in this particular market. Well, on Friday, the US non farm payroll report added some flavor to the mix. February saw an increase of 151,000 jobs, a boost from January's 125,000, but still fell short of the 160,000 forecast. In the same report, the unemployment rate also edged up to 4.1% instead of the expected 4%, which tells us that hiring remains above break-even level. If you take a look at the chart, you will notice at this juncture, gold is trading sideways ahead of next week, a wait and see mode, I will say. As you can see, price is confined within the 2,900 and the 2,925 level. This for me reflects the ongoing uncertainty around the Fed's monetary policy decision, especially after the Fed chairman made it clear that immediate rate cuts are not on the central bank's agenda for now. So, what does all of this mean for gold? How are market participants digesting this mixed signal, particularly when you consider that key players like the People's Bank of China and the National Bank of Poland are still actively purchasing gold, as highlighted in the latest World Gold Council report? In this video, I will be breaking down the chart in simple terms. We will pinpoint key price levels, examine the prevailing trend, and uncover potential trading opportunities in the current market environment. Before we jump in, please note that this presentation is purely for educational purposes. It's here to help you think critically about the market and doesn't constitute financial advice. Always consult a professional before making any investment decisions. With that said, let's jump right into the chart and explore what the gold market might have in store for us this coming week. Now, my first point of contact going into the week is the daily time frame, where I have been able to take into account the character of price action in the last 17 months. And if you look at this critically, you will see that the market has strongly been bullish. And to further emphasize the strength of the buyers in this market, I was able to connect the series of higher lows, giving us this beautiful ascending trend line to work with. Now, if we zoom into the current market dynamics, that is the last 6 to 7 weeks of trading activity, you would have noticed that ever since price action tested that all-time record high at the 2,955 level, price action has been confined within 1,000 pips range bound structure, as you will see here. And for me, this emphasized the prevailing uncertainty in the market right now, which is usually peculiar with uncharted territory, where major key players in the market who had capitalized on that uptrend move may, out of fear, want to be taking some profit off the chart. And this usually results in consolidation phases choppy market condition and even retracement move. Now, as we head into the new week, while price still remains within this range-bound structure, the question is, are we going to see price break out of the resistance line, which is the record high area, to continue the uptrend move? Or are we going to be seeing a situation where the support line of this range-bound structure will be breached and broken to the downside to see price retrace back into that ascending trend line, maybe to continue the uptrend move or even break down to inside a sell-off? Now, to help us navigate this current market dynamic, I have my key level for next week around the 2,900 area, cutting through the half of this range bound structure. And of course, you know how we use our key level. As long as price remains above them, we look out for buying ideas. And if price breaks down below the structure, we'll definitely be looking out for selling ideas. Now, will price maintain its momentum above the structure, or will it break through? Well, let's scale down into the 4 hours time frame to see the structural detail we shall be using to navigate this key level going into next week. But first, let's take a quick look at the economic calendar to see what important data and events that are coming up to influence this market next week. Now, as you all know, since we are monitoring the gold commodity, we are going to be focusing on high impactful events from the United States economic docket. Now, the first impactful event for the coming week will not be coming until Wednesday, March 12th, and we are looking at the Consumer Price Index. The CPI measures the average change in prices of goods and services in the last 30 days, indicating inflation levels. If we have a higher CPI, it signals rising inflation, which may lead to the central bank to raise interest rates. And this also can strengthen the US dollar as well. However, if the CPI comes in low, it may prompt rate cuts, weakening the US dollar at the same time. Then on Thursday, we have the Producer Price Index, which measures the average change in prices that producers receive for their goods and services. This data here is also considered to be an inflationary data at the wholesale level. Then fast forward to Friday, March 14th, we are looking at the University of Michigan's publication, that is the Consumer Sentiment Index. For those who don't know, this data here measures how optimistic or pessimistic consumers feel about the US economy's future. So these are the major events we are looking forward to. And from what we are seeing on the chart, we can tell that market participants are strategically positioning themselves for this event. Now, going back into the chart, we shall be scaling down into the 4 hours time frame, where I do have a structural detail that will be guiding our trading decisions next week. So right here on the 4 hours time frame, what I did was to capture the character of price action since the beginning of this year. And of course, remember, we have this major trend line we talked about on the daily time frame. Now look at what happened right at the beginning of this year. We saw a huge deviation from that major ascending trend line to initiate and establish another trend line, as you will see here. So for me, going into the new week, this trend line here is going to be playing a significant role. If price maintains above this trend line, we continue to look out for buying ideas. But if this trend line gets breached and broken to the downside, we might be looking at the possibility of price retracing back into that major trend line, dovetailing to over 1,700 pips. Now, Zooming into the current structure, you will see here that we have a situation where throughout the course of last week, the market was more into a consolidation phase. As you can see, price was majorly confined within this $25 range, that is between the 2,925 and the 2,900, sitting technically above this ascending trend line. And of course, you know how we use our ascending trend line. As long as price remains above them, we want to continue to look out for structures and patterns that support buying ideas. Now, for me, at the beginning of next week, I will be willing to maintain a bullish idea where price further breaking out of the 2,925 level will welcome more buying opportunities for me. And if it so happens that price action breaks down this ascending trend line and this key level, we shall be looking at selling ideas. In fact, when I took my Fibonacci retracement tool to measure this retracement here, let me do that right away so we can see. So taking your Fibonacci retracement tool, running it through the impulse leg, you can see that price action is right within the golden zone area, that is between the 78.6% and the 50% of the previous bearish leg. So will this be the completion of the retracement of the downtrend that will incite a sell-off? Well, time will tell, but trust me, I will be with you in the comment section of this video at the beginning of the week after monitoring how price reacts to this range-bound structure, where depending on the direction of the breakout will determine if we are going south or going north. So there you have it, my in-depth look at the XAUUSD for the week ahead. If this video helped with your independent trading decisions, a thumbs up will be greatly appreciated. And if you haven't yet, consider subscribing for more insights, weekend market prep, and updates. Thanks for watching. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.